Welcome to the second episode of the Monthly Dirtcast. I'm Jared Dillian, editor and publisher of the Daily Dirt Nap, a financial newsletter for investment professionals. It's worth mentioning that this is the first episode of TMD since the election, the first episode under a Trump administration. Trump is going to make America great again, and we're going to focus on making financial podcasts great again, because most financial podcasts are pretty boring. I assure you that today's is not going to be boring. I have with me the voluble Tony Greer of TG Macro. Tony's had a long career on the street, longer than I have. He used to work on the GSCI at Goldman Sachs back in the day, moved over to equities, and rode that business down through automation and regulation all the way down into the dirt. He got off the elevator at the bottom floor and decided to start a financial newsletter. Tony, say hello.
Good to be here. Nice to see you, Jared.
How'd you like the intro music?
You're joking me with that, right? I wanted to go to sleep.
Come on.
No, I like house and techno when I'm shopping. That's really it, though.
They play that in the grocery store?
Yeah, they play that in the mall where it belongs.
Now, I know you're a big Fish fan, so you have to know that Fish is the biggest scam ever devised to mankind.
How is that possible?
So you have these guys, they're like, okay, we're going to make music for rich Wall Street guys and convince them that every show is different. So instead of seeing one, they have to see all four. It's a huge scam.
Do you think that has something to do with the fact that they like to explore all different kinds of music over a run in a specific venue, or do you think it's because they're trying to scam us?
Actually, I'm kind of joking, but I do I think it's interesting that Wall Street guys like jam bands. I don't really understand that. I've never gotten Allman Brothers, Fish, and stuff that like is different every time. Like, my music is very planned out. Let's put it that way.
Yeah. I think that part of the draw is that they touch on a lot of musical history when they're going through 3 or 4 nights in a venue and playing 15 to 25 songs in a night, right? Their influences are the Beatles, the Rolling Stones, Otis Redding, George Clinton, Bob Marley, right? And I think that the band likes to touch on all of that to present a full package concert, and I think that that's why people are so satisfied. And that's probably also why people are jumping up and down from the first row to the last row for 3 hours.
I shouldn't rip on it until I see a show. And we have a mutual friend that keeps trying to get me to go see a show with him, and I haven't gone yet. So maybe I should just withhold judgment until I see it live.
Come down to summer, 13 shows at the Garden.
Okay. So I want to start right off with a plug for what you're doing. Tell me about TG Macro. Tell me about your publication. Tell me what you're set out to do.
What I want to do is bring a little bit more of pop culture and humanity into the world of trading and finance and the world of tactical trading, right? I'm trying to boil it down to a level that people enjoy and that people want to read the next day, right? Traders are super habitual, and when you can get them into the habit of putting value in front of them every day, they're going to be reaching for your note, and they're going to be reaching for it in front of Goldman Sachs' note and in front of the Deutsche Bank. I like it to be centered around tactical trading. I like it to be centered around trades when the stars line up, where you have a fundamental edge and a technical edge. And I also like it to be enjoyable to read. I think that that's what the street is failing.
Okay, so let's say, the newsletter space is, well, let me ask you a question. Is this business turning out to be easier than you thought or harder than you thought?
It's a great question. In so many ways, in more ways than not, it's way harder than I thought. Right? When you're writing as a sales trader, which I did for 15 years, you're much looser with the things that you write, and you're having more fun because you still have a franchise behind you, and there's still orders coming in the door every day, right? When you go out on your own as a publication, I've had this desire to be super accountable with everything I say, and sometimes you can drive yourself crazy trying to figure out what you want to write about, and drive yourself crazy where you want to risk money, and those kinds of things are what make it really difficult and keep me up at night. So the newsletter space is, it's a bit competitive. It's pretty crowded, and there's some really good ones. James Grant is legendary, and Gartman has a massive business, and 13D is a more high level publication. But I think what you touched on is it's really hard getting people to pay for stuff that you write.
It's a lot harder. It looks easy, and it's a lot harder than it looks.
It is, and there's a double-edged sword there for sure that I've enjoyed getting my arms cut off with. Right, it's the kind of thing where you get help from places that you didn't think you were going to get help, and where you don't get as much help from places that you thought you were going to get these wave of support. Right, so that's the dichotomy of it, and it's really interesting when you get a surprise email about somebody that's very interested in what you have to say and wants to continue hearing it. So that's the interesting part about it.
So we've known each other for about 8 years. So one of the things that we used to do when you were at Dahlman Rose, and we'll talk about Dahlman Rose later, one of the things we used to do, this little tradition that we have, is whenever we call each other during the day, you pick up the phone, bring Wall Street.
We're bringing it back, man. We're bringing Wall Street back. People don't know what it was like, right? People don't know what it was like to work in loud, boisterous trading rooms with people standing up and down, yelling and screaming. And I can't imagine the last time a phone was broken on a trading desk. It just doesn't go on the same way anymore.
No, and I think we had a discussion probably around 2011 about bringing Wall Street back, the two-tone shirts, the gold ties, the Bull and Bear cufflinks,
everything, suspenders, slick back hair. We want a little bit of gecko back.
Yeah, I want to bring back Bud Fox.
Sure,
I really feel like Bud. Every time you would answer the phone, Wall Street, I felt like Bud Fox, like sitting there on the trading floor.
Yeah, so. I couldn't wait when I first started writing about the Trump administration. I couldn't wait to start making some references to the old Wall Street. I think it lines.
I think we should do
nicely.
that. We should bring that back again. We should do some of that. Bring Wall Street back,
without a doubt.
The interesting thing is that in a Dodd-Frank world, we haven't hired anybody in 8 years. We have not hired any new kids on the Wall Street in 8 years. At Lehman Brothers, when I was hired in 2001, they hired 300 MBAs. 300. Wow. I heard a couple years ago that a bank on Wall Street, their analyst class for kids out of college, for their analyst class, was 8 people. So Wall Street has not been hiring anybody, and it's the same crew of guys that have gotten older. And if you go on a trading floor now, you look around, and it's predominantly guys 40 and up. It really is.
That's true. That's true. There are guys 40 and up, and then there are a younger set of kids that are much younger that are trying to just get on the trading desk because they know that Wall Street has afforded them such a nice lifestyle, right? They just got put through college because their dad had a good job on Wall Street and everything was smooth sailing. And now that the compensation package and arrangements are much different, they're still sort of chasing down, I think, that old... This is what got us there, and I don't know if they're looking in the right direction in terms of how the world is changing.
Well, what's definitely going to happen in the next couple years is that we are on the cusp of a big hiring wave. I mean, we're talking about rolling back Dodd-Frank. We're really going to do it. Trump signed an executive order just the other day, and you can bet there's going to be some big classes. Speaking of which, Trump... So the morning after the election, you probably woke up like a giant sundial, right? Like casting a shadow over Long Island, right?
It was exciting. It was exciting for everybody. It was exciting for people around us,
So out of all the guys that I sort of run around with, now I was not a Trump supporter. We sort of sparred with this leading up to the election. I was a Gary Johnson supporter. You were a Trump supporter. Tell me what that was like going into the election.
Well, it was easier then being the underdog that had no chance, I was more of a Trump supporter, kind of having the feeling that the country wasn't going to stand for the alternative. And obviously being behind some of the things he says, being behind some of the things that he's trying to accomplish, not all of them, but that's what it was like. And now it's much different, right? Now it's, he's become the arch enemy of the media and the arch enemy of liberals. And it's getting to be even more heated now than it was before the election.
So let's break this down policy by policy, where Trump is going and what we think, okay? So the biggest thing that Trump has done right out of the gate, much to the chagrin of Ray Dalio, is this protectionism, is his trade policy. He got rid of TPP right away, talking about trade with Mexico. If you're a classical liberal like myself, a libertarian, a free trader, this is a recipe for probably inflation in the U.S. There's that old Bastiat quote that says, when goods don't cross borders, armies will. Like, you, as somebody who supported Trump in the past, what's your feeling about his trade policies?
Well, I think that there are going to be dramatic changes for sure. And I think that people are going to have to understand that things changed dramatically 8 years ago when Barack Obama took office and he was talking about fundamentally transforming America. And things happened to the point where he practically ran his political party into the ground with the policies that he carried out. So now we're going to have a look at different policies. Okay, we're going to have a look at a little bit of more protectionist policies from a president that loves the country and wants the best for us. So I'm not going to go ahead and say that these are going to start world wars until I see how he approaches it. Now, I'm definitely nervous about the way that he might approach this. Obviously with tweet storms, et cetera, et cetera. I don't know that's the best way to attack complicated policy, but he's been given no alternative, right? So,
I'm going to interrupt you for a second. So I think Trump loves his country. I think absolutely that's true. But I think from a trade standpoint, he is misguided. And I think he's being led there by Steve Bannon, who has described himself as an economic nationalist. So that, I think, it concerns me a little bit.
Yeah. I know it's definitely a concern. I'm not saying that this administration isn't going to come without its risks, right? I want to fade everybody in the world that's going out there and saying, okay, this automatically means war, right? I don't think that it should automatically mean war when we're such a big trade partner with everybody. I think that Donald Trump is probably just trying to get back some of the sort of less advantageous deals that we may have been signed up for that aren't the best for the country and that aren't the best for American businesses. I think that people are going to find a way around getting goods and services, the ones that they need. Certain things are going to be inflated in price and they're going to be less available, and maybe other things will be a little bit cheaper. But I do agree that the market is obviously waiting for a big wave of inflation coming, and I'm certainly not fading that.
So let's move on to, I think, something he's doing right, which is tax policy. And, his Treasury Secretary, Steve Mnuchin, who was head of mortgage trading at Goldman Sachs, went on to IndyMac, which was bought by One West. The guy's basically a mortgage trader, okay? And Mnuchin, in his past comments, has been not as enthusiastic about lowering taxes on upper income earners. He wants to lower taxes, just not as much on the higher rates. And from my standpoint, the tax code has gotten so progressive, where half of people aren't really paying income taxes at all. They're paying payroll taxes, but not income taxes. You cannot really lower taxes much more without lowering the top rate. So here's the interesting thing. We're going to see this in the next couple of weeks. They have to sell this to people. They have to say, we are going to cut taxes on the quote unquote rich, and it's a good thing because why? How are they going to make this argument? Do you think they're going to be able to do it?
It's going to be difficult because it's going to be another Trump policy that just gets widely attacked as something that means world disaster, right? So
Totally agree on that.
That's going to be the uphill battle. It's going to be difficult to sell when he's talking about a huge amount of infrastructure spending on the other side of some of his policies, which are obviously going to be inflationary. So with the fiscal spending, it's going to be difficult to say we're also going to be able to cut people's taxes and have it make sense, right? So I think that that's where he's going to start to get attacked immediately. If the media is smart, they may go after a different angle because sometimes they're not so smart. So I think it's going to be an uphill battle, just like everything else, right? I think it's going to be very difficult to convince the American public, other than the people that have a very good handle on finance, that some of the things he does make total sense, and other things are just going to be a lot harder to get everybody behind.
Yeah, and actually, the one thing I think they'll have an easier time of getting people behind is corporate taxes.
Yeah.
So everybody knows that we have the highest corporate taxes in the world, and there's been a lot of talk about lowering the corporate tax rate to 15 or 20%, having a one-time repatriation of overseas income, and maybe even lowering taxes on LLCs and S-corps. Small businesses, which would be huge. And these are all things that are going to be discussed in the next couple of weeks, and I'm excited about it, frankly.
Well, with an LLC after the name of my new company, I'm excited about any kind of tax cut that I can get, that's for sure. And I wish that some people would start to consider that before they start taking shots at other policies and everything, right? Like, people are going to have a couple more dollars in their pocket, so maybe that can make them deal with other
we
things
haven't
better.
we haven't experienced the stimulative effects of a big across the board tax cut in a while. I mean, if you remember the second tax cuts that George W. Bush did in 2003, which included tax cuts on capital gains and dividends, that was a big boost to the economy.
That was
I mean,
a fire
the economy
starter.
was ripping in 2004 and 2005.
Yeah.
So Dodd-Frank, so we're going to roll back Dodd-Frank. Mnuchin has, in his confirmation hearing, he said that he's not necessarily opposed to Volcker when it comes to FDIC-insured banks. He doesn't mind the Volcker rule when it applies to deposits that are being insured by the FDIC. But I think the administration is open to pretty much getting rid of most or all of Dodd-Frank, including the CFPB.
Well, I think the most important part is to get the market-making function of investment banks back, right?
Yes.
That was sort of that was casual damage of the Volcker rule. That was an unintended consequence. Where
Giant loss of liquidity, high yield markets.
changed the whole face of the market, right?
Yeah.
You can't house risk for your clients anymore. That broke down a lot of communication that was going on between traders and clients when you don't have an idea. You're not being shown bids and offers and things, right? So automatically everybody's liquidity goes back to the screens. And I don't think that's the best place to be transacting business necessarily at all times.
Yeah, the high yield market was a mess in 2004 and 2015, 2014 and 2015. So if you look at, one of the things that here's something that pisses me off about Trump. Okay, so for the last 8 years under Obama would have a press conference. He'd get in front of the TV cameras and he'd make comments about some sector or something, and my portfolio would get nuked. And now under Trump, he gets on TV in front of the cameras and he says we should have a weaker dollar, and my portfolio gets nuked. So I'm kind of sick of presidents, making comments about sectors or financial markets. I mean, how do I get myself on the wrong side of every single president? I don't understand how that happens.
It is. It's amazing. It's amazing. But I think, put it this way, you are going to have to get used to it just like everybody else, right? I mean, Barack Obama got the ability to win an election and then go ahead and enact things that he wanted to enact and behave the way he wanted to behave, right? Like, I didn't love that he would go on and rap the news, but we had to deal with it. You don't love that he's tweet storming in the morning and ruining your portfolio, but I think it's kind of temporary.
I forgot about the slow jam news thing. Or
everybody did.
I forgot
did.
about
It's
that.
fine. Yeah, it's okay.
So about his weak dollar stance. So one of the things that I wrote in the Daily Dirt Nap was, I think we're going back to the days of beggar thy neighbor FX policies, right? So if Trump is jawboning down the dollar aggressively, you have to imagine that Canada, Great Britain, the euro, like foreign countries are not. I mean, they're not going to tolerate a significantly weaker dollar. They are also going to weaker their currencies. And I think what this means is that, I mean, ultimately it's probably the one thing that's most bullish for gold in a long time. If we get ourselves into this competitive devaluation, then it's probably the biggest buy signal for gold in about 5 or 6 years.
Right. Broadly speaking, I think you've got to own gold in some form in your portfolio during this currency war. And, Brazil's President Montega quoted a currency war, and I think it was 2012. And the election of Donald Trump is only going to make it a more heated war. The thing that Europe and Japan need to consider is that their economy has been dragging for, any 2 of 10 years. The interest rate differential is really getting away from us, right? Japan has got 10-year pinned at 0. The Eurozone has got, call it Bund's 10-year yields are at 5 or 10 basis points, with a high recently of 25 basis points. That yield differential is just going to have so much money flooding into the U.S. and flooding into the dollar and flooding into U.S. Treasuries anyway, that I think he's going to have to control it, because the goal of the ECB and the goal of the Bank of Japan is to set their currency on fire, and we can't just let the dollar, the dollar, rage on forever. So I think that he's probably tempering the dollar strength that he's causing.
Yeah. And also, the Fed has been pretty dovish just since the turn of the new year. So The FOMC, the regional presidents rotate off. So Esther George is gone.
Right.
Lacker is gone. And we have Kashkari, we have Kaplan, we have Evans, and we have Harker, which was centrist to dovish at best. And this latest FOMC, there were no dissents.
Right.
And we're not hiking rates. We're probably not hiking in March, June, maybe. And all this talk about having 3 hikes in 2017 is gone out the window.
Sounds familiar, doesn't it?
Yeah, it sounds pretty familiar.
We just went through that in 2016, where I think at some point we were looking at 3 to 4 rate hikes. That was a lock. And now the same thing has happened again, where, the Fed seems to pick a new boogeyman, right? We had an issue where all of a sudden the international developments were something that the FOMC suddenly started talking about last year, and that was one of the things that knocked the rate hikes off the table. This year, we've still got weakness abroad, et cetera, et cetera. We've got some structural issues here, but they're going to have to act because we're creeping toward the inflation target and we're creeping toward the unemployment target.
Yeah, we're not even really creeping. I mean, we're getting there in a hurry.
Very true. In the last 2 months, that's right. That dynamic has changed in the last 2 to 3 months for sure.
And especially in Europe, too. I mean, you're looking at German inflation, Spanish inflation. It's like it's ripping.
Ticking up across the board. Purchasing managers are above 50 in basically, all the major industrial nations, which is pretty serious move. I mean, this is a global pickup right here.
So we're having increases in inflation, pretty rapid. And at the same time that we have this president that is going to be doing pro-growth, supply-side policies.
Yeah.
We're talking about GDP getting up to 3 or 4% again, and the Fed is still dragging ass.
Crazy.
It's crazy.
It's crazy. It's crazy, and it's got to stop. They've got to raise rates. I mean, it'll be the best thing for the country for us to have some money to put away and earn a yield somewhere, right?
I know. And my call, I feel bad because my call was wrong, because my call has been that the Fed would stop over-promising and under-delivering. My call was that they would start to deliver on these rate hikes, that they would look at the inflation and say, look, we're behind the curve. We have to do it. And they're still not doing it.
You're putting a lot of faith in non-elected government officials there.
So speaking of non-elected government officials, there's 2 vacancies. Now, I don't expect you to know the answer to this. This is a hard question. So there's 2 vacancies on the Board of Governors,
right.
Okay? I mean, there's only 5 people on the Board of Governors. There's 2 vacancies. The Senate has been sitting on these appointments for the last 2 years. And Yellen and Fisher are going to be gone. So I think people aren't really talking about, look, in 2018, 4 of the 7 seats on the Board of Governors will be Trump appointees.
Yeah.
The Trump appointees will have a majority on the Board of Governors. So this is a hard question, but do you have any idea what the Trump Fed is going to look like?
I'm hoping that it will be a little bit more sensible and reactive one, like you, right? I'm hoping that they're seeing these signs of inflation that the market is screaming about and addressing it. Because what it seems like is the market is screaming about inflation expectations. The media is not screaming about inflation expectations. And now we've got an FOMC that's back on their heels talking about not raising rates enough, right? Or not raising rates, and we're saying it's not enough. I'm hoping that during Trump-appointed governors that they're going to look at this a little bit more pragmatically, like Steve Mnuchin looks at the Treasury market more pragmatically, and maybe they'll say, the bottom line here is that rates are going to have to go higher, and then let's see what happens, right? I would rather see them make the mistake of action, and we'll see if it's a mistake.
100% agree.
And then right, exactly. And then
a mistake of inaction.
Right, then a mistake of inaction, because at least if you put stimulus out there and you say, okay, we're hiking rates and here's the rate hike, you can sit back and see how the market takes it, right? If you cause an utter dislocation in the bond market, then maybe it's something that you might have to worry about going forward. If the bond market digests rate hikes, et cetera, and the cycle continues, then I think you're doing a great job managing the economy.
I think I've seen some possible picks that Trump might pick for Fed chairman, and I think all the picks that I've seen are bad. Like I think people aren't thinking about this.
The Gordon Gekko pick is fake news. He's not making him the Fed governor.
Well, people have talked about Larry Kudlow.
Yeah.
I mean, and Larry Kudlow was mentioned for Fed chairman back in the 80s when he was the economist at Bear Stearns. And, in in spite of his TV personality and all that, he's a pretty respected economist. But he's really he's kind of like a holdover from the Reagan, Laffer supply side days. He's really a Republican in that mold.
True.
And I just don't know if that's really the guy that Trump is going to pick. And I just don't have any answers. I don't know who he's going to pick.
No, it's very tough to speculate about that.
Yeah. So let's get off topic for a little bit.
Sure.
So where did we meet for the first time? Do you remember?
I met because I tracked you down because I got your Bloomberg about buy everything. Which
buy everything.
Yeah,
Bloomberg.
that was really inspiring to a writer. That was one of the best. So
that was the first you heard of me.
That was the first I heard of you, and then you had left Lehman Brothers, and I had you up to Dahlman Rose trying to hire you as our ETF trader without even knowing that you had no interest in being an ETF trader anymore. So you came up to Dahlman Rose, and you were like, "Hey man, what's up? Thanks for having me up here." And Ernie came in and said hi. And I had introduced you to him, and you were like, so what's going on, fellas? And I posed it in front of, Ernie. I said, this would be a great candidate for our ETF trader. And you were like, I'm going to write a newsletter. So we were like, okay, great meeting. Have a good rest of your afternoon. And then we went for, to some Thai place or something like that after that.
Oh, I don't even remember that part. But you said the other day that I looked pretty different back then.
Yeah, you did. You look like Radar O'Reilly, 140 pounds with these round glasses, short, shaved head. And I was like, wow, this is the guy that wrote that buy everything email, huh?
Yeah, I put on a lot of weight.
Awesome.
I was also kind of a miserable bastard back then.
You were. You were so quiet.
I was very unhappy.
You were very tense. You wore it on your sleeve. You were like a nervous wreck.
Yeah, all the time.
Yeah, so I remember sort of picking you up off the street like a little puppy dog.
So Dahlman Rose, and we can talk about this firm because they're gone, right? Like, so we can tell Dahlman stories.
We sure can.
But it was a good place though, right? It was
place.
It was a great place.
We had great push and pull with our clients. We had a great franchise. We owned the transportation, energy, and commodity space in terms of being a sort of new and cutting edge and hustling group of guys that would give you the attention that the big investment banks weren't.
So just for the benefit of our listeners, so Dahlman Rose was a small to medium-sized broker-dealer, I guess.
Small.
But it was a full-service investment bank, though. You had research, you had investment banking.
We had investment banking division. We had a great staff of research analysts. We had two desks full of type A chest-beating guerrilla sales traders. We had hungry, talented research salespeople and a few that had no idea what they were doing. But in general, yeah, it was a force. It was a force. We looked a lot bigger than we were, that's for sure.
So I can't remember, the firm no longer exists. Did you leave before the end of the firm, or what happened?
Well, what happened was they were bought by Cowen, and Cowen sort of picked and chose who they wanted. And amazingly enough, they started with the investment bankers and then moved on to the analysts of the firm, and they didn't really offer too many of the sales traders a job there.
Okay.
Right. So it was sort of, these are the terms if you want to come and join us.
Do you remember how much that deal was for?
It was for not enough compared to what we were making as pure commission brokers. That's what it was.
Yeah.
So I mean, basically it was sort of, they had a boilerplate deal for the sales traders who were all making 5X at the time, and a very small number of sales traders took the job and went to Cowen.
Okay.
Yeah.
Yeah, I remember. It was a good place though. And actually there was, I think there at least one guy from Lehman ended up going there too. So moving along, So the two of us are giant Yankees fans.
Yeah.
I've been a Yankees fan since 1979. Mm-hmm. I was 5 years old. My dad took me to my first Yankees game up in the Bronx, and Bobby Mercer hit a grand slam.
Wow.
And I was hooked forever. So what do you think of the Yankees this year? Have you been paying attention?
Yeah, I'll be honest with you. The Rangers have become my new spirit animal, right? Like, that's the team that has really taken my heart. But I don't take my eyes off the Yankees. I'm just not as much of a maniac as I was when Mariano and Derek and the people that I grew to love so much were there, right? I like following them now because it's like following a blue-collar team, right? They have their ups and downs. The beauty is that there's no A-Rod distraction, and you can really just get behind this team and root for good baseball. Right, so that's what I like about it. I think it'll be interesting. I love seeing the young players come out. I love to see how this deal with Aroldis Chapman works out. I love to see how the prospects. Torres looks like he's one of the best defensive shortstops in the mix this year. It'll be amazing.
Yeah, Gleyber Torres. So Gleyber Torres. He was a shortstop on the Myrtle Beach Pelicans here for the Cubs, and he was part of that deal that sent Aroldis Chapman over to the Cubs.
Oh, right.
But I don't think this. So, Cashman has, he had this obsession with like left-handed power hitters. He called them big, hairy monsters.
Right.
So guys like Teixeira, like, is a classic example of it. And he just wanted to load up his team full of like 35-year-old left-handed power hitters.
Bronx Bombers.
And it just like didn't work after a while. Yeah. And I think now that most of those guys are gone and we have a younger team, it can work. But I think Cashman's new obsession is just loading up the bullpen with closers.
Right.
And I don't think that's necessarily the winning strategy either.
No, he seems to have a little Mariano anxiety, right, where he's trying to replace that megastar, with the first guy he can. And so we'll see how that works out. Cashman, you can have your complaints about, too. Obviously, over the years, he's had some sort of strong-minded strategies, like you said, that haven't exactly worked out. He loves to chase guys that have their best years behind him, et cetera, et cetera. So this is why it's at least more interesting to watch this Yankee team, because they haven't all proved something yet. So it's more interesting to watch guys like that try to prove something for the first time, rather than watching guys that are going into the Hall of Fame.
I want to see a team full of a bunch of AAA guys succeed, and I want to see that stadium fill up again.
Forget it.
Because you go to games now. I mean, it's like a library in there. It's like a wax museum.
Jared, I've had a different Yankee ticket salesperson contact me probably once a quarter for the last 4 or 5 years since I owned, and even going back to since I owned season tickets and rejected them going into the new stadium because they were like 5x the price, and I haven't bought season tickets since then. But they still have this pesky broker that winds up calling you up and says, hey, are you going to buy some tickets to the stadium this year? And I say, are they under $100 yet?
No.
And the guy's like, well, we have some for $100 or so. And you say, well,
Bull Market Stadium.
Yeah, exactly.
I mean, I have too many good memories from the old one. So I was there the game that Roger Clemens, he won his 400th game and got his 4,000th strikeout in the same game.
Unbelievable.
And the stadium was full. They were playing the St. Louis Cardinals.
Right.
And it was an interleague game, and we barely got tickets. I was in row X, like all the way up in the left field stands. And I was so, I didn't want to get up and lose my seat, so I actually had to pee in a cup. And then it was the back row, nobody was paying attention, but it was section Q, row X, they almost ran out of letters.
Right.
You know?
That's what made the old stadium the greatest place on earth, though. Right. That place hung over the field, and it was ominous for the people that showed up.
And the acoustics in there were insane.
Insane.
And that's the thing with the new stadium. The acoustics are bad.
The sound floats up and out. Right. The seats are so much farther away from the field.
Yeah.
It's a completely different dynamic.
It's not good.
No, it's not.
Bull Market Stadium.
Yeah, it's Cinderblock Stadium.
And also, actually, I saw a tweet. This was during. You're gonna love this. I don't know why I didn't tell you this before. So I saw a tweet last year during baseball season. There was a guy at a Yankees game, and he was yelling. He was heckling or something like that, and he got shushed by an usher. And he got shushed at a ball game, and he tweeted, "Welcome to de Blasio's New York."
Right.
So let's talk about New York and the direction that New York has taken in the last 4 or 5 years.
Really upsetting for a guy that lived in New York during New York's sort of heyday, right? I lived in New York from 1991 through 2000 as a single guy working on Wall Street, and had a great time. New York was a very different place. It was a lot easier to get around. It was much less crowded. And, I mean, you say de Blasio in New York now, and those are fighting words. They're literally, you're going to find, I would dare you to put a de Blasio supporter in front of me, because they're very difficult to find.
So I was having a conniption fit when he was running. So in the Democratic primary, he was easily the most far left guy.
Right.
The New York Times actually outed him for providing material support to the Sandinistas.
It's unbelievable.
And he became mayor of New York, and it's been a disaster.
As a commuter, it was like he flipped a switch, right? As a commuter that is in the subway tunnels and on the Long Island Railroad and in taxi cabs and walking around on the street like a real street pounder in New York, it was like he flipped the switch and said, okay, I'm mayor now, and I'm letting all of the homeless sleep on the street, right? So it literally went from, Mike Bloomberg's New York, which was a classy operation and ran like a top in terms of as well as it could. And then it turned into, all of a sudden, you're getting off of the Long Island Railroad, walking over 3 homeless people to get to the subway where you're walking over 10 more.
Now, the one thing I will say is that in terms of, just cleanliness, New York, I lived in New York in the late 70s and early 80s. It's not as bad as that.
Nope.
It's not as bad as that, but it has gotten a lot worse just in the last 4 or 5 years. And New York, unlike a lot of cities, is like, if it's like a jungle, and it gets overgrown unless you take a machete to it every once in a while.
Yeah.
Like it just in New York, just there's chaos.
Right.
It's a different city. Other cities aren't like that.
No, it's true. Chaos builds up everywhere, especially when you have now you've got protest situations in Midtown, and you've got homeless situations downtown, and it's just really becomes a really difficult place to navigate, especially if you're just going there to enjoy yourself.
So I haven't been following New York politics at all. So I think he has about a year and a half left in his first term.
Yep.
Are they talking about who? I mean, they've talked about Hillary Clinton running.
Yeah.
Which would be, I honestly would be better.
It's a great booby prize. It's a great booby prize.
I mean,
for
it
her.
would be better.
Yeah, better than jail, right?
Yep.
I think it's a good option for her. So I would love it. I would love it if Hillary Clinton became mayor of New York. I think it would be a sort of prize that she could accept, and she could stay in the public eye and try to make some positive sort of spin to the end of her political career, which probably needs a positive spin right now. But if she wants to go out in class, the mayor of New York is probably a good way to do it. We are begging for an uptick.
But in terms of people who can manage the city effectively, is there anyone out there that's even being mentioned?
No, there's not. There's really not. It's a sad state of affairs. I mean, the problem is once again you don't have the best and the brightest.
So you and I remember
sector.
New York in the 70s.
I do.
It was almost bankrupt.
It was insane.
It was insane.
I remember driving into the city with my family and having the windshield wiper guys come
squeegee
across.
guys.
Yeah, the squeegee guys. Whether you liked it or not, you were getting that and. So that was a very different situation.
I'm actually surprised the squeegee guys haven't come back.
It's kind of sad. They were fine.
All right, so let's talk about a couple of trades, and then we're going to get to some fun stuff.
Cool.
So what are you looking at right now? Like, what is on your radar for trade ideas? What are your top ideas right now?
Well, obviously I want to be tethered somewhat to industry with the infrastructure space. I want to be tied to natural resources, right? That's my background. So I feel like I've got a much better edge trying to follow names that are in transportation, energy, and commodities, where we're selling things coming out of the ground rather than, looking at tech trades that I may not understand as well. I'm an oil bull, that's for sure. I mean, I kind of look at the energy market as like the financial market after the financial crisis, right? The stocks all got destroyed. We saw their credit go into the toilet, and
it was definitely
back.
a bottom. It was definitely a bottom.
Yeah, 100%.
But let me ask you, so we just discovered 200 billion barrels in the Permian. You're way more of an energy expert than I am, but in the world where we keep having more and more discoveries that are bigger and bigger, how do you stay are you a short-term oil bull, long-term? What's in terms of the supply-demand dynamics? What are your thoughts?
Well, we've spent the last couple of years being totally overweight with oil, and we're going to come into balance in the second half of 2017, right? I think it's pretty encouraging that that OPEC has cut production. I think it's encouraging that they've stuck to the cuts so far this year. I think it's really encouraging that these companies have delevered and reorganized their operations. And so that's why I'm looking to dig into some of these companies for the longer term, to be totally honest with you. When oil came off so hard and gasoline came off with it, et cetera, if there are guys like me thinking, I would like to buy my lifetime supply of gasoline down here at $2 if I can, there have got to be some CEOs that are burning gasoline that are thinking along the same way. And I think that that's what got it off the bottom, right? So as long as we've got, a decently growing or fairly strong global economy, or at least at the pace that we're growing, we're going to cut through this supply. And I'm amazed at how strong oil is trading now, right? It's kind of boggling my mind, and that's what's making me bullish, right? We've got the spec length is enormous, right? Spec length just went up another 10,000 contracts to almost 500,000 contracts of net spec length. Rig count is ticking higher, right? Activity is breeding activity, and amazingly enough, the price is still 53 bid. Right? We've got shale producers selling above 50. You've probably got all kinds of international players selling above 50.
So
and the price is still there.
Let me ask
That's a good sign.
Do you like drillers?
Yeah. There are certain setups in the drillers that I like. I'd rather just stick to the E&P companies. Yeah, so to finish my thoughts on energy, the most important thing to me is like when oil got destroyed, the energy high yield market came all the way off, right? Spreads widened, and now they've come all the way back, right? So if their credit is doing better, their operations are more streamlined. Some of them have done some financial engineering that makes their balance sheet look better. These are the ones that I think that are the companies that are going to survive coming out of this. And I want to be long names like Conoco and Apache for the Permian and some smaller players like WPX Energy. And that's the kind of way I'm playing it. A big cap, a small cap, a mid cap, and try to, find the best, most, appealing chart setups that I can, because everything for me is steeped in technicals in some way.
Yeah. So definitely overweight energy, as you described.
Yeah.
Anything you would underweight?
I think Silicon Valley has seen some of its better days.
Yeah.
But, it seems like Amazon going completely
I think you and I are in
berserk.
agreement on that.
Yeah, I feel like there's just going to be a change in the sphere of influence. President Obama had Silicon Valley in his pocket, and there was a big mutual admiration society there, and I'm sure he was making things easy for their businesses while he was shutting down the coal industry, et cetera, et cetera. So I think sort of the Trump administration will be, I think the Silicon Valley guys are going to have to watch their step, especially with, protesting every single step that he takes and every move that he makes. The guy is working really hard, and I'm not sure that he's going to allow them to have as much power over everything that goes on as Barack Obama did. So maybe that names like Facebook don't perform like they have in the last 4 or 5 years. Names like Amazon don't perform. Maybe Google isn't as bold of a runaway stock.
Sure, big cap tech.
Yeah, big cap tech. I don't know. And I don't know that I'd be putting a ton of money into it right now. The market looks pretty good in general.
But just from a portfolio level standpoint, overweight energy, underweight tech is a pretty good place to start.
Yeah.
Anything else you like?
Yeah, I still like. I would still play precious metals and gold stocks from the long side. I mean, that was my killer trade from last year. Being long the GDX at 13 and American Barrick at 7, saying everybody's forgotten about these and nobody cares about them, right? I went around the horn and said to people, hey, you care about these gold stocks? No. Oh, okay, thanks. I can call the next guy. Hey, you guys looking at gold stocks? No. Okay, good. That's interesting. These are all good inputs to your information when you see the pile of negative debt growing, right? But that was last year, and this year we've got different reasons to be long gold. We've got inflation, right? So I think that I would still play GDX, gold stocks, precious metal space from the long side.
Yeah, I keep, it's funny. Like I have a giant gold position that's legacy that I've literally had for 10 years plus. And obviously I was excited about it 5 years ago, and I'm not excited about it today. But smart people keep bringing me back to gold. Yeah. And I don't necessarily understand it. The charts don't get me super excited. Nope. But the price action has been pretty bouncy. And the more Trump talks down the dollar, the better trade this looks.
Yeah, the trade grinded higher and higher last year with the bond markets just roaring away, right? And they tipped so many securities into negative yield, right? We had a $14 trillion pile of negative yielding securities, which is now down south of 9, right? And that's what knocked the GDX back off of its highs from above 30 to where we are now, was simply rates moving. That was just a currency and rate move. And so what we're seeing is a sort of response to people that weren't in the gold market that are saying, hey, wait a minute, these are coming off really far here, and I see inflation down the road. So now I'm going to come in and buy gold stocks for a different reason than people were buying them in 2016. I think that's definitely gone on as a change of ownership.
Just one quick note about the gold miners. GDX is a massive ETF. Yeah. And it seems like, especially more in the mining space really than any other sector, nobody really picks stocks anymore. Like, I haven't heard a view on AEM or Gold Corp or any individual. It's always GDX. And not only that, now you have these double and triple levered ETFs. Nobody even trades GDX anymore. They trade the leveraged ETFs. Yeah. And the volatility, GDX will move 5 to 10% in a day. When there's really nothing going on. It's turned into a football, and it's kind of annoying. It is.
It is. The stock picking art has gotten squashed with the ETF growth, right? Because when there's one weak link, it gets pulled up by the rest of them invariably because of the ETF buying, right? So there should be all kinds of valued ARB in there if the weak stocks really don't deserve the valuation that the ETF is pulling them to. But what happens
They all
is
just trade like a marching band.
Yeah, but they all wind up hanging in there, right? Like there'll be a blow up that in one of those names, sort of they'll miss earnings and the stock will back off 5%, and everybody that's long the ETF says, well, I'll have some of that down 5%, right? So it kind of fulfills itself.
All right, so we're gonna finish up here. So let's do a speed round. We're going to do a speed, I took some advice from one of our listeners, said we should do a speed round just like we do in the Daily Dirt Nap.
I haven't missed a speed round since you launched the Daily Dirt Nap.
So, by the way, the speed round was kind of like my pizza. Yeah. Like it was all the stuff that I wanted to talk about during the week, but I didn't have space, so I threw it in at the end.
Listen, if without speed round, there would be no study break. So I'm glad you started speed round. Study break is my favorite.
So let's do a little speed round. So I'm going to give you a choice, A or B, right? I'm going to choose between a couple of things. Okay.
All right.
Here we go. Street meat or dirty water dog?
Dirty water dog.
Oh, man. Really?
Big time. I allow myself 2 hot dogs per month. I'm old school.
Yep. All right. Dirty water dog. Natalie Portman or Claire Danes?
Can I puke down my shirt? Is that an option?
That's not an option. You have to pick.
Neither of my type. Okay, fine. Claire Danes.
I think that's the right choice.
Yeah.
That's the right choice.
Yeah.
Market order or limit order?
Market orders.
Absolutely.
Come on.
Yeah. Uber or Lyft?
Uber.
Yep. Lugers or Sparks?
Tough one. I lean Lugers. I lean Lugers because it's a little bit more festive in there.
I like Sparks.
I know.
I'm going to do Sparks.
Sparks has got an unbelievable wine list, but sometimes it's like Dance of the Living Dead in there.
Okay, so he picked Lugers.
Yep.
Lugers or Il Mulino?
Il Mulino.
Yeah.
Yeah, you got to go sit in the room with all the Italian guys and the grappa bowl and the all that stuff. I mean, that goes far.
Yep,
somebody puts a plate of garlic-soaked artichokes in front of you.
All right, let's do some 80s Yankees. Who do you want on your team? Willie Randolph or Dave Winfield?
Willie Randolph.
Yeah.
Willie Randolph, man. I mean, he was a leader. He was a captain, right? Like, he was really, really tremendous on and off the field. He was another guy. I think Derek Jeter modeled his life after Willie Randolph because if you remember, Willie Randolph was pretty much had the cleanest record in baseball, and he was such a good citizen of the sport. And I think that Derek Jeter looked up to that.
He's also a pretty good manager.
Yeah, does a great job. Yeah. Does a great job. I loved him at the helm of the Mets.
One last one. 2 broke girls or waterboarding?
2 broke girls, I guess. I like to breathe. I like to breathe.
All right, so let's tell people about TG Macro again. What is it? Where can they find you online? What's your Twitter handle? Give us all the info.
All right, it's very simple. It's tgmacro.com. I write a newsletter called The Morning Navigator because I try to sort of point out, I distill a lot of the market information. I distill all the information, and I try to point out the most relevant movers and shakers sort of the day and draw everybody's eye to the right direction, right? So I try to have a really good time doing that too. I put it into a good theme. I include a lot of technicals and charts in the Morning Navigator, and then like Speed Round, I have a study break section where I like to put a lot of quotes in and talk about life to appeal to the human side of traders. So far, so good.
So tgmacro.com. And what's the Twitter handle?
Twitter handle is @tgmacro.
Anything else we need to know?
Nope, that's it. Dig in.
This concludes the second episode of the Monthly Dirtcast. By the way, we are not financial advisors. We are publishers. We are not giving financial advice. Thanks to our guest, Tony Greer of TG Macro. Thanks to Blake Jarrell for